What is good, guys? It's Ray J back with another video. And this one I want to break down what's going on with the overall market, what you should be watching for moving forward. I'm going to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. Why tomorrow is going to be a very important day as we have CPI coming out, and why technicals are looking more bearish approaching CPI on Tesla, SPY, Apple, and many other stocks. But before I break anything down about all of this information, before I get into any more details, let me just mention a couple of things. I am personally not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends in just about 2 days, so check it out before they run out. Anyways, let's break down what's going on with the market. So Tesla dropped 2.23% for the day. In the morning, I told you all that Tesla could get a pop here and there. We did see an even bigger than expected pop to about 278. However, we established a bearish divergence in the process on the RSI. Then I warned you all that Tesla would likely see some downside, and we could see it around like 268 or even 266 being tested. Tesla ended up closing just at about 267, and it did touch the 266s almost exactly. So that was very close to what I was predicting. But now the question is, how will Tesla move from here? To be honest with everyone, okay? I can't predict anything about tomorrow with 100% certainty. It all depends on CPI and many other factors. But solely based off technicals, on Tesla, on SPY, on Apple, and all these different stocks, we have a confluence of indicators all suggesting that there may be some downside coming. I'm going to show you exactly why that is in just a couple of minutes, but I first need to talk about some data, CPI, and all these different things very quickly. So for today, we had Apple's big event, and this led the market to selling off a bit because, like I told you before, historically, Apple does tend to sell off after big events like this. Apple announced a new iPhone 15, not to mention some new updates with the Apple Watch series, the ninth one that came out, not to mention the fact that looking at Apple, they have improved GPUs. They have very, very nice cameras, new features, and very, very awesome updates for their new products. Now, this was very awesome for the company, especially for the long term. I think there's going to be a lot of hype. And there were some very good deals I saw, especially for like the new charger. But this was good for Apple from a fundamental standpoint in a way. But when it came to the share price, we saw Apple tank, and we saw this have a big effect on SPY, the QQQ, and even Tesla. And now, when it comes to the way the market's going to move from here on out, Apple is now out of the picture, and the biggest factor is going to be CPI. So, why is CPI so important? Because it affects the Fed's policies and the livelihoods of everyday people, not to mention the economy, different businesses, and the list goes on. CPI comes out at 8:30 a.m. Eastern Time or New York time, 1 hour before the market opens. We're going to be looking at CPI and core CPI year over year and month over month for the month of August. And this is the really, really important thing. So for inflation year over year, we're expecting it to be between 3.5 and 3.6%. If it is 3.7% or higher, the stock market is going to see some downside. If it's as expected or lower, it's going to cause the market to potentially rally and like the data. That's for inflation year over year. We're expecting an increase. For core CPI, which is inflation without food and energy, we're still expecting a downtrend. We're expecting it to be between 4.3 to 4.4%. If it's 4.5% or higher for core CPI year over year, that's going to cause the market to slow down. Once again, 4.5% or higher will be bad for the market, causing downside, bad for the bulls, at least in general. And if we get anything around 4.4% or less, we could see the market still try to hold up or even bounce. So this is going to be very important. Make sure you guys watch this 1 hour before the market opens. I'm going to be awake to talk about it too. It's going to be very telling. We're also going to be looking at the month over month forecast, but one of the biggest things to look for is year over year because the headlines tend to talk a lot about this. So this is going to determine how we move forward tomorrow. Make sure you're prepared for this. It's going to be very, very big for the markets. And looking at the current data, you can see there's a clear downtrend in both CPI and core CPI. The purple line right here represents all items without food and energy or core CPI. You guys can see that this is a little bit more sticky. We're expecting this to continue to downtrend a bit, but it really depends on how close we are to expectations. And if we see CPI, with this uptrend that is perpetuating, it's going to likely continue to increase. That's most likely going to happen. But the question is to what extent? Is it going to be a big increase or is it going to be as expected? That's going to determine how the market moves for tomorrow, especially for Tesla and all these different stocks. This article right here talks about how there's progress being made in inflation. We're starting to see the Fed making some good progress, but the problem is with energy going up, this could have another effect. Now, so far, the Fed is making progress and whatever happens could impact their policies in the next FOMC meeting, which is going to be in about 1 week. So that's going to be very important as well. That's why we're going to see a very big reaction from the markets. Now, as far as Tesla goes, just as a reminder, we actually had this article that came out about the air suspension. We can see the differences between the Cybertruck side by side in this picture. You guys can see the air suspension. It looks very, very awesome. I would personally prefer that over like the default or like the phase model right here. It looks very, very awesome. I would really love suspension on it. And it looks just brilliant. Looking at some of the specs, you guys can see that the low ride is better for like tighter corners and for increased aerodynamics. It can help to decrease drag and stuff like that. However, with the high ride, that's more ideal for like traveling on uneven terrains. It could even be used for off-roading technically, and it could help increase ground clearance and help it like through like rough conditions. So it really depends on what people prefer. I honestly would like the high ride. I think it looks really, really nice. I think it looks cooler too. And it really depends on what people want, but in my opinion, this is just a very interesting feature I haven't really seen talked about for too long. Anyways, when it comes to some important data, we started to see the inventory levels go up just slightly for the Model Y. I don't think this is because of demand like slowing down big time. I think this has more to do with production as we're like a couple of days into September. I think production is going up, and we're going to see if this competes and continues to hold. Remember, when it comes to their numbers, September tends to be strong for deliveries, October tends to be a little bit weaker, and then historically, November and December tend to be very strong. We're still on pretty good track so far, seeing this big decrease after the price cuts. Let's hope we start to see more and more inventories drop as demand goes up. Tesla has an overweight rating from Morgan Stanley, which is some good news. That's why Tesla bounced so much yesterday, going up almost 10% or more than 10% if anything. The price price ratio was up high, but it may decrease a bit as Tesla's starting to look a little bit weak. Looking at the current technicals, which I will talk about in just a few minutes, none of this data matters too much because what matters more is going to be CPI. And looking at the short interest, we're starting to see this increase a little bit, maintain a slightly higher level as more shorts are piling into Tesla. The last time this came out a couple of days ago, we saw almost 40 million Tesla shares being shorted. So a little bit more shorting on Tesla than usual. That led to a small short squeeze, which is part of why Tesla pumped yesterday. But we may have seen more shorts pile in once the data comes out. We're going to find out, and that could cause Tesla to drop later on. Tesla did drop on higher volume. We saw about 135 million in volume. Not the best of signs. And I just want to be honest now, from a technical standpoint, Tesla's not looking that strong. So now let's break down the charts. I'm going to try to be very brief. Let me just be clear. I'm not a fortune teller. I don't know what CPI is going to be, so we have to be open-minded to anything. But based off technicals, the odds do favor downside for tomorrow. I'm going to break down exactly why that is. So I'm saying this because when you look at Tesla, we have a bearish divergence right here that developed on the RSI, and we also have a potential bearish cross in the PPO as we're starting to lose some momentum on the 4-hour time frame. Tesla began to downtrend, and as it downtrended, you guys can see that we have this big gap down here, which is now starting to attract it. And Tesla's looking a little bit weaker after it pushed very, very hard and formed this divergence. Now, I can't promise anything. If we get a good CPI, if CPI is aligned with expectations or lower, we're going to see Tesla push back to 275. If we get a hot CPI, okay, we're going to see Tesla start to head towards the 260 area or even below that. What do I think is more likely, in my honest opinion, okay? I'm open-minded to anything. I want to make it clear I'm not going to like try to force anything down your throats or anything like that. But I do want to note that I'm leaning a little bit more bearish. I think there's a 55% chance we see downside and a 45% chance of upside. I'm leaning a little bit more bearish on Tesla looking at this trend, and I think the odds favor it potentially cooling off. Now, it depends on CPI, of course. I don't truly know, but that's just what my prediction is looking at the current technicals, but not just because of Tesla, but also because of other factors, such as like Aapl, Nvda, and etc. If you look at SPY, we have a potential slanted head and shoulders. Could this be a trap? Sure, but the problem is Aapl has something even more weak looking, which could slow this down even more. If we get a good CPI, we could see SPY start pushing towards this. Let me just double check the 450 plus area. If we get a bad CPI, it's going to come down to about 440. Where am I leaning towards? I'm always open-minded to anything, because it depends on CPI, but I think it's a little bit more probable we see SPY start to cool off towards 440, looking at this potential slanted head and shoulders. Now, it's not just Tesla that could drag it down, but also because of Aapl. If you look at Aapl, this does not look that great for the bulls. We have a clear head and shoulders developing on Aapl and starting to play out so far. Now, could this be a trap? There's always the possibility of that, but having this formation right before CPI is not the best of signs. If this plays out, we're going to see Aapl sink towards about 170 to 171. If it's a trap, we could see Aapl try to push back to 182. But looking at the last few days, it has been looking relatively weak. especially looking at the PPO. The volume was a little bit hot as it continued to sell off. What seems more probable, although I'm always open minded, I would say that there's an increased probability of downside for Apple. I'm leaning a little bit more in that direction that this is going to likely play out. And it may be because of CPI. I don't know if we like kind of like gap up then drop or we just drop from here. I'm anticipating some downside. I think it's a little bit more likely. Now, I'm always open minded, of course. I know technicals are not everything, but I'm still leaning in that direction because of all these different confluences. Now, on the QQQ, we have a potential slanted head and shoulders as well, and it's looking more bearish on the PPO. If we get a good CPI, however, it could invalidate these signals, and we could see it approach 378 to 380. If we get a bad CPI, if CPI is hotter than expected, 370 to 368 are on the table. Where am I leaning? I'm leaning a little bit more bearish looking at this potential slanted head and shoulders, looking at Apple, Tesla, and SPY. That is all kind of like, those are kind of like shifting my opinion a little bit more in that favor. However, I'm also trying to be unbiased because I'm accounting for the other possibility of something unexpected happening. But just to be clear, guys, although I'm open minded, I am telling you that the technicals are suggesting downside is more probable. And I just want to warn you about that for tomorrow when CPI comes out. Another reason that's very, very important to look at would be Nvda. Nvidia is continuing to downtrend, making lower highs and lower lows. If you look at the charts, okay, today we made an attempt to bounce and we failed, and it continued to close at critical support at 448. If we get a bad CPI, if CPI is hot, 440 to 435 are possible targets on Nvidia. If we get a bounce thanks to CPI, we could see 456 to 460 being tested. Where am I leaning towards? Although there's a bullish divergence developing on it, there's no sign of it playing out, and there is still a possibility of this thing continuing to downtrend. Okay, it still hasn't bounced, so it is looking more bearish still. There is a bullish divergence trying to develop, but there's no sign of it playing out just yet. That's why I'm a little bit concerned about Nvidia. We could still see downside, and the odds do favor it cooling off more. For that reason, if you look at Nvidia, account for Apple and all these other tickers, that's why it's looking like downside seems a little bit more imminent, as all these tickers are just showing the same thing. Now, I'm just going to try to quickly go over just a couple of others. Conversely, you could argue that the VIX has this gap down here, which it could still fill down to 13 and the market could bounce. You could argue that, but at the same time, you could also argue it's establishing a higher low and trying to push up higher. It's basically a coin flip on the VIX. You never know what's going to happen with CPI. That's why you want to be open-minded. The VIX is also very manipulated. It doesn't always move the opposite of the market perfectly, even though it tends to do so. On SPX, there's a potential slanted head and shoulders developing. If we're bullish, 4,500 plus is a possibility. If not, we could start sinking. It is looking more like it's going to sink looking at the PPO, but I just want to be open-minded nonetheless. Looking at the dollar, it's basically a coin flip. It's still in the middle. It's very flat right now. We'll see which way it goes. If it breaks below the 50 and starts sinking towards this 104 area, that's going to cause the market to pump. If we get a bounce and starts pushing towards 105, the market's going to slow down. We just want to watch it just to be safe. And last but not least, Amazon and Meta are both looking weak. Amazon's about to get a bearish cross in the PPO, looking a little bit weak as well. In my opinion, if we're bullish, thanks to CPI, 144 could be tested. If we're bearish, it's going to come down to 138. Okay, so we're prepared for anything. What do I think is more likely? Downside seems a little bit more likely. We're about to get a bearish cross in the PPO. It's losing momentum. The volume is slowing down. And on top of this, you're about to see it potentially come down towards this imbalance down here. You guys can see the imbalance. This could drag it all the way down towards this 138 area, 138.6. The odds do favor that potentially happening. Meta's I think it already got the bearish cross in the PPO, getting this nice balance. We have the gap down here on Meta towards 297. We could see some downside. Maybe it pops a little bit, then sees downside, or it just drops towards like the high 290s. Either way, guys, look, I just want to be honest with everyone. I don't know what's going to happen. I'm always open-minded, but I want to warn you all that Apple's looking weak, Tesla's looking weak, the QQQ is looking weak, Nvidia's looking weak. The list goes on. They're all pointing in the same direction, that we may see some downside soon. That's what they're suggesting. No promises, but it always depends on CPI, of course. But I just want to warn you about these technicals, which are all pointing in the same direction. And typically when that happens, they tend to be correct. Okay, so with that said, be prepared for anything depending on CPI, but always have this warning in the back of your mind about what I'm telling you about the technicals right now. All right, hope that's as clear as possible. Tesla to the moon because the long term is very bright. There may be some short term downside looking at the current technicals, but I always want to be open minded nonetheless, and I want the best for everyone. Tesla is going to recover, guys. Don't worry. I'm bullish for the long term. It's going to hit 400 plus in the future, but for the short term, there could be some pain coming. Okay, I'm being honest. That's what these charts are suggesting, and we'll see what happens tomorrow. I'm always open minded to anything, but I just want to make it clear. Okay, so thank you for listening. Have a great day. Thank you, and peace out.